The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 15th Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And today, you and I will go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Together we can go take a look at these markets, whatever it is that you're looking at. I'll put an extra set of eyes and see what we can come up with. And so let's go ahead and get things kicked off on this terrific Tuesday. Of course, this is none other than Hotel California, sponsored by Tiger Financial News Network. I'm Steve Santa Rhodes. And let's get things kicked off. Welcome to the show. Right now, we got the Dow up 225 points. She's trading at 17,595. S&P's up 29 points, trading at 2,050. NASDAQ Composite up 65. Russell's up 14. The DAX closed up 311 points. The FTSE closed up 143. Gold is flat. Silver's flat. Light sweet crude up $1.30. Trading at 37.61. Put in that nice little G that you and I were taking a look at yesterday. Of course, we looked at a number of them. In fact, yesterday was one of those odd days where as I was coming on the air to be with you, I was also having to write the newsletter update to get my clients long in the market. But you already knew that. It was one and the same, right? We just simply went through the patterns. And I got emails from a number of folks out there. So, that's great. We had a number of people that were short. Some tightened up their stops. Some went ahead and exited and actually reversed. That's what we like to see out there from the trading standpoint. So let's get things kicked off here. Let's take a look at short-term time frames, long-term time frames. Let's really put everything in perspective out here. Because remember, in 2015, the market, in one sense or another, hasn't really done much, right? If we put up the S&P 500 on our screen out here, and we just simply go take a look at the yearly chart out here, we'll go ahead and say, here's our yearly chart. I guess I have to get rid of an arrow and a couple other things out there, but let me do that just to clean this up, just to always keep things in perspective. Remember, this is the market that keeps on giving to both bulls and bears out here. Let's turn that off. Let's turn, there we go. Let's turn, what that arrow is. Let's delete that. So here is where we began the year in 2015, January 2nd to be exact. The S&P was trading at, it opened at 2,058.90. We are trading right now at 2,050.30. We've had a whopping 8-point move to the downside inside of the S&P 500. So we've gone nowhere. Last time that we saw this phenomenon, I don't know how we're going to end up the year out here, but the last time we actually saw any kind of doji was back in 2011. Now, 2011, add 4 years, you're 2015. 2011 was the year before, was the third year of a second-term president. No, it was not the second, it was an election cycle. Hello, knock me on the head here, right? It was prior to the election year, and that's where we're entering into right now. So are we going to have the same result? I don't know whether we're going to have the same result or not, but it's not often inside the S&P that we have a total annual doji. We did have a couple of them, one back here in 1987. The open was 242. The close was 247. There was another one back here in 1994. The open was 467, we'll call it. The close was 450, or the close was 459. So there's your doji. But we still have a trading time left. I just want to make sure that we keep things in perspective out here. But now let's go take a look at what the perspective is. What is the market doing? Remember, we have Santa Claus rallies, right? Hence the hat. If we're going to go ahead and put on a rally cap, we might as well put this one on. Now, the charts that we were looking at yesterday, you and I, my clients and I, we certainly were taking a look at the ES Mini was one of them, and it was the 2-hour chart that was giving you and I the best signal. Why? Because it completed all kinds of patterns. It had A to B equals CD patterns to the downside. It was moving lower with less relative weakness. It was in that 7th inning stretch. It had created, when we got off the air at 2 o'clock, it had created that bullish reversal signal out there, that bullish engulfing candle. Price went ahead, got back inside the 120-minute market profiles. You can see we're way outside of them right now, only in the third leg to the upside, with more to come. Now, with more to come, where's price going to take us to? Now, we're taking a look at the ES Mini out here. So if we go take a look at a daily chart for the ES Mini, let's punch that up on our screen out here. That's trading up 31 points right now. Let's come back and put on our market profiles. Let's use a little bit of everything. Now, by the way, inside the ES Mini, kind of interesting here. Today or yesterday. I think it was, well, we can come back and take a look at it. Well, I'm not going to. I don't know if I should. I'll skip that. It looks like the ES Mini has that little golden cross out here, but maybe there's not enough data. So let's come back to just really take a look at what are the market profiles out here. So let me go ahead and turn those back on my screen. Give me a moment to do that. I just have to hit the right button. And why are we going to use this? Because it's going to assist us in trying to identify where price is headed next. So you're trading at 2,040 and 3 ticks out here, 0.75. And the ES Mini is headed up to the 2,057 area. Now, is it going to get there today? I don't know. It could. It absolutely could. Why could it? Well, if we go take a look at the 30-minute chart here for the ES Mini, let's take a look at it. What we're going to notice is that, you remember that 7th wave pattern that you and I like so much out here? Well, we've recycled past that here just during the last half hour. So this is a half-hour chart that you and I are looking at. But, like all road races out here, or Rhodes races out here, you can always find trouble ahead. And in the case of the ES Mini, even though it's gotten to what we'll call an 8th leg, which it really doesn't do if we're going to go ahead and use very specific Chapman wave counting out here, what we do know is that price between 12:30 and 1 inside the ES Mini, as it shot up again, was moving higher with less relative strength out there. Now, again, it's a 30-minute chart. We've gone ahead. We've made a 1-to-1 A to B equals CD pattern to the upside. As we speak right now during this 30-minute session, which is not over. It's not going to be over until another 16 minutes from now. But we're already forming a bearish reversal signal at the end of a pattern. So there are 2 patterns out here. Now, what would that say to you and I? That would say that depending on how the candle closes at 1:30, what we really could be doing before price is going to get up to that level that I just gave you inside the daily chart, that maybe what we should anticipate is some kind of retracement. In fact, that's absolutely the message. If we truly see during the course of, now it doesn't have to be during the next 16 minutes. It can be between now and 4 p.m. out there with regard to reversal signals. We don't really have that yet. It's too early to make that call. But we do know that the ES Mini has completed. If it's, it's like running a race out there, right? When you get to the finish line, you see it, you strive to get there. And as soon as you hit it, you're ready to just kind of relax a bit out here. And that's really what the market should be doing. So now that you complete an A to B equals CD to the upside out here, let's assume that that is the case. Now what we can do is go take a look at potential retracement levels out here. Those retracement levels could easily take place between now and 2 o'clock tomorrow, when the Fed tells you and I that they're going to raise interest rates. Do you remember, when was the last time that interest rates were raised out here? Do you know? Maybe you'll look that up during while we're reviewing where price can actually pull back to. But let's take a look at a 30-minute chart out here, and let's take a look at that ES. By the way, we're looking at the 30-minute charts out here. The ES Mini is on the left side. The NQ is on the right side. We can see in the NQ, with regard to its 30-minute profiles, it's up against resistance. So the NQ is already saying, hey, I don't know if I have the strength to lift these markets. In fact, it's saying it isn't. The Dow right now back below, just kind of like the ES Mini, back below its 30-minute market profile. And the Russell 2000, the same thing. So, we have now another set of charts out here to help guide us as to the rough weather ahead, right? Remember, we're at a market where, in essence, we've gone nowhere. So what does that mean you should do? Well, you should do, if you're long, you should do just as my subscribers and I did early this morning. We just simply adjusted our stops out here because we don't want to get ahead of ourselves. The market's going to do what it's going to do. And what we can do, knowing what to do and doing what you know are two different things. Same set of words out there. And so we know what to do. And then we went ahead and did that. Now, as we take a look at the ES Mini out here, and we take a look at just simply going from yesterday's low out here, 1983, up to the high out here, as we were just coming on the air. The first retracement level, I said heck, didn't I? It would feel like the bears would be dancing in the streets. They would say, that's it, the counter trend rally is over. And they could be right, but they would be dancing in the street because the first move to the downside is nothing more than a dead cat bounce of 0.382 retracement that would take it to 2021, 20 points lower out there. And that should be, quite frankly, that should be anticipated as to what the market wants to do. And if it doesn't do that, if that is not the outcome that we see out here, that's telling you that we're headed to that 2100 area. Now, maybe there's going to be a knee-jerk reaction after the Fed tells us that they're raising rates. I did ask, when was the last time that rates were raised out here? The answer, it was done by Ben Bernanke. You guys thought that Ben probably only reduced interest rates out there, but not so fast. In fact, it was back here. The trading day was June 29, 2006. That was the last time that we saw the Fed funds rate increase. It went up to a total of 5.25% out there. Now, that was actually Ben's third meeting. You see, Ben was indoctrinated and came in, and his first meeting that he chaired out here when he moved in for Volcker was back in March 28, 2006. In fact, one of the reasons to actually take a look at this is because, the market doesn't really always react the way that at least the media would have you think out there. And we can go back and we can take a look at, in fact, the entire series of rate increases, which began, by the way, here back in 2004, June 30th, 2004. When the interest rates went from 1% to 1.25% out there. Sometimes the market goes down, sometimes the market goes up, then down, then up. Right now it's going up, and we should anticipate that it's going to retrace. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 211. S&P is up 26 points out here. And even though things look like they're working on my screen out here, I'm not getting any chart data. So that's a bummer because I had a number of things that we were going to take a look at, such as the long-term charts out here. Yeah, we'll turn over and we'll see that there's no data there. So that's a real bummer. It only happens when I log in to do the shows out here. So, clearly there's a problem. Yeah, I mean, if we want to go take a look at what the oscillators are doing, we can't take a look at that. So the good news is I can at least tell you what the markets are doing, such as Priceline, is up 26 bucks. Somewhere around 26 bucks. Intercept Pharmaceutical is up 22. But we got a backup plan. Let's go take a look at what we can look at. I'm gonna switch over to some other. Oh, hey, wait. We might have life. We might have life. So there was a question. Let's see if I put in Apple. Okay. So there was a question inside the Tiger's Den out here. It's not about my computer. This computer is faster than Roger Bannister. Roger Bannister was the one who believed, right, that he could run the 4-minute mile. Of course, he saw himself doing it prior to actually doing that. But that's just another story out there. Let's take a look at, and it has nothing to do with my provider. This has got to be a Skype situation, because I've heard David White talking about the same issue or un-issue out here. I've got the market profiles turned on. I was trying to get that answer for one of our dinners out here, what the market profiles were in Apple, and they're just simply not coming up on my screen. So when they do, or if they do, I'll go ahead and give you that information. But let's do this. Let's go take a look at, let's try to keep things in perspective, right? We took a look at really where we're at for 2015 in the S&P 500. And let's go take a look, and we took a look at intraday charts, right? So we looked at the 120-minute time frame chart that across the board, it was in the Dow futures, it was in the Nasdaq futures, it was in the ES mini. It was why I had every now and then I get an email from people saying, "How can you have so much conviction when I make the statements that I do?" Well, the reason that I have the conviction, it doesn't do me any good to come on the air and be wishy-washy with you. If it's neutral and I don't know, I'm just going to, that to me is an opinion, but I'm going to come out and absolutely tell you that is, neutral is the best stance out here. But when I also do have, because of all the work that I put into it and all the patterns that I take a look at, it's important to have conviction, even if that conviction is different than what maybe, you might be looking at. Here's some conviction. Let's take a look at it. One of the indices that gets trashed, and people are convinced that this is the reason that the market is going to crash. It's going back down to the lows of 2009 and all of that. I'm not the first person that's going to say that, is because of the transports. The transports gave us the first signal. Now, that may be the case out there, but let's kind of really look at what the transports are doing and put it in perspective. It's always a matter of being able to put things in perspective. So on my chart out here that we're taking a look at, we have both the trend line, channel line, horizontal, diagonal resistance out here. And now if we take a look at the transports and we take a look at the March 2009 low, and we just simply use a trend line, that means we're going to use the bottom of the candle, the bottom of the wick, with the bottom of the bar, whatever it is you're using. That's really going to be our first touch point. And touch point number 2 out here is going to be the October 2011. We can see that the transports have not even come down to test their trend line. The transports, quite frankly, are stronger than the New York Stock Exchange. They are stronger than the actual Dow Jones Industrials out here. Yet you got everybody and their brother, well, not necessarily everybody and their brother, but you have a lot of people that are convinced that the transports have just simply fallen apart. The problem is that, sometimes you might pick up a book, you think you're going to read it, and you read the back cover and the front cover, and you think you know what's inside the book. I promise you don't. You got to read the entire book. And that's really what you and I are doing. Now, that's the trend line. We can turn the trend line off. We go take a look at channel lines. And oh, yes, by the way, when we take a look at channel lines, just whether they're horizontal or diagonal, once you break through one level, you can go up to the next level. And that's really what the transports did. If we take a look at the transports, and by channel lines, you and I are taking a look at the bodies of the candle, the transports actually broke above the channel line back in 2013. And where do they go? The exact same distance between the first channel, just added to the second channel. And that was the high that it made back here in November. So look, maybe the transports are going to pull back, but where are they going to pull back to? Support. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. As we went into that half hour there, if we go back to the ES mini, we did get that bearish reversal candle, the bearish engulfing bear sash candle, because this is the futures contract that we're taking a look at. So that says to us that the retracement has begun. And what we ought to anticipate is first to move down to 2034. It's possible that at 2034 you could find some support. That's your point of control for your 30-minute chart inside the ES mini. More likely than not, we will see a move back to the 2027 area, and then 2021 should not be out of the question out here. So that's what the, does this mean this is where you would sell the market? If you are a perma bear, then have at it. Absolutely. I would say you're better off looking at the long side of the trade. Maybe the market's going to respond initially negatively and actually get the ES mini to pull back to 2007. And there you might find as an extremely nice gift from Santa out here. The market's going to move higher. It's going to move higher through at least the the end of next week out here. The question is how high. The 2100-ish type area is a decent target out here. Back to the longer term charts out here. Where did we put those? We were taking a look at the transports. So the most important thing for you and I to recognize is that as much as people will use the transports as, hey, this is the leading indicator that everything's fallen apart here, it hasn't even made its way back down to the trend line. To the trend line, let alone the bottom of the channel. Now, if we take a look at horizontal levels of support out here, we'll put on our primary trading ranges. We'll see that it, easily 72.44, which would be horizontal. It's a weekly level of support out here. Moving back down to that level, nothing wrong with it in doing so. Now, those are the weekly profiles. If I put the monthly out here, we're going to see those are really right around the same general area. Remember, the weekly and the monthly are using different opens and closes out here. So you've got really strong support in that 72.45-ish type area. Now, that's on the transports. If we take a look at the Dow, the Dow is weaker than the transports out here. That's not necessarily what everybody would have you believe. If we take a look at the Dow, here's its rising price channel out here. And we can see that back in August, back in September, back in October, price came down, was really testing that trend line, the trend line. Let alone, we actually saw the Dow close outside of the price channel, meaning when we were taking a look at the body of the candle out here. So in the case of the Dow, if it's unable to bust it to the downside, and busted to the downside would be about 16,729. And it can get back above 17,750. You got 18,765 in store for it. Now that is the weekly set of primary trading ranges. If I put the monthly out here, it's really the Dow is at a midpoint, a level of support. So it's really the weeklies, I think, that are giving us the best little signals out here. Now, if we see the Dow, for any reason, close below the trend line out here, it's not the transports that we're giving the message. It's the Dow Jones Industrial that really is giving us the message of a real problem. And really, we're going to see the same thing inside of the New York Stock Exchange. That is what the NYA is, the ticker symbol on my screen out here. We can see that I think I actually have that on this one right here. Give me a moment. Let's put up there we go. Let's put up the NYA this way. And here we can see that, price yesterday, we talked about this yesterday, price had pulled back and it was sitting right on support. Right on support of the trend line, right on support of the horizontal number, 99.62 out there. What it really needs to do to get bullish, it needs to get above that little rising price channel line. That's the yellow line. Right now it's probably priced about 10,368. Now, here's kind of an interesting thing. If we take a look at what's really moving today, you've got oil. We talked about oil yesterday. And when we talked about oil, because I get the emails all the time saying, is there a bottom, both in oil and in natural gas. And one of the patterns that we looked at inside of oil, I'm trying to get over there right now, was the same pattern. Well, one of the same patterns that we used to actually go along the markets yesterday, right? That was that seventh wave move. And what we pointed out was, in taking a look at we got the continuous contract up on our screen, but that's okay. For this purpose, it works the same as taking a look at the current contract. And what we noticed was we had gotten down to that seventh leg. Well, it doesn't look, unless oil totally reverses course today, you've got a confirmed seventh wave move to the downside. Now, we covered last week the mere fact that everybody on God's green earth on the media stations that tells you that the S&P is moving directionally with light sweet crude out there, those people are eating, they're eating food that you and I don't want to eat out there, because it's because it's a correlation that doesn't. It's not a great correlation. It's just not a great correlation. But nonetheless, if you want to buy into that, well, and you want to be bearish the market, well, you've got a nice seventh wave move that suggests that light sweet crude is going to move higher. You might say higher to where? Now this is interesting. Let's actually put light sweet crude up, see what we have as far as any kind of long term. Take a look at any of our primary trading ranges. I don't know. Let's put this up on the screen. What we're going to find out here, but let's go put this up here. So I've got light sweet crude right now coming back into, I only have data, looks like going back to 2002. And here are our horizontal trading range boundary levels. Let me see if I can put up the monthly numbers. Give me a moment. We'll change over, put those in here. So the monthly numbers say that if oil, from a longer term basis, that the next level of support really for oil would be about $30.33, which is below the actual swing point that is trading into 2009. The daily says bounce. You say how high. I say let's go find out. Let's just simply go see if we can actually get on the current contract our TAS market profile. So one area that it looks like light sweet crude could go ahead, and we'll wait to see if this actually populates out here. One area where you would say that light sweet crude should at least bounce to would be nothing more than a dead cat bounce, a 0.382 retracement, very similar to what you and I took a look at after the A to B equals CD pattern completed inside the ESPN. And by the way, we've got an A to B equals CD here inside of light sweet crude. That A point, that's going to be your swing that we're using out here at 52.05. Come on. Work with us. It's not going to let me do it. That's a bummer. Here's your A point out here on October 9th. Your B point is down here on October 27th. Your C point was out here on November 3rd. It made more than a one-to-one expansion, that's for sure, to the downside. But nonetheless, where light sweet crude ought to bounce to is $41.22 out there. Nothing more than a dead cat bounce. And somebody says, did I miss a swing down? No, I don't know. I've got the current contract. Maybe Bill, if you'd be so kind to expand on what you're asking inside the den out here. But I wish I could actually go ahead and get that A to B equals CD, but it's not. It's just part of the problems I'm having with the system out there. As you can see, I got an error. What the heck is that error message out there? Oh, that's interesting. Now it gave me the A point out here near December. Maybe during the break we'll have to have a conversation. I don't know. But here's the A to B equals CD pattern, if that will go ahead and show up. Let's see what style that it made. It made a 1 to 1.618 A to B equals CD. Yesterday's candle, by the way, what's referred to as a piercing candle. So you've got a completed A to B equals CD. You've got a seventh wave move to the downside. You are inside your daily market profiles, which showed up, which formed today, and says that price is going to head to the $39 and a penny level out there, and that is on light sweet crude. Well, I had mentioned, we were taking a look before my system just kind of went on the fritz out here. We were taking a look at Federal Reserve dates out here. Let me see if those are actually out here. Maybe I lost all that stuff. This is my little chart out here that shows all the different, not all of them, but most of the Federal Reserve important days. Like, QE3. QE3 took place out here on September 13th, and many people think, without doing the work, that just meant that the market took off from there. And the reality is it didn't, right? That was kind of an exhaustion move. The market went ahead and pulled back, did a pretty decent retracement down in November 16, 2012 out there. Here, Operation Twist, that took place on September 20th. Of course, that was just a revitalization of a previous Operation Twist out there. This was not the first time that the Fed had used that. And the market went ahead and it didn't make a bottom or a low down here until October 3rd, 2011. Of course, QE2 out here. QE2 went ahead and moved the markets higher, not immediately. It lasted for about 2 days. Market went ahead and digested that for a couple of weeks before it went ahead and took off topside in December. And QE2, by the way, was in November 3rd, so it was really a month worth of trading where that digestion took place. The final rate decrease, by the way, that Ben Bernanke took when he took us down to zero, that was on December 16th, 2008. Of course, that was not good enough. That did not go ahead and make the markets move higher. See, everybody thinks, hey, if you raise rates, the markets are going to crash. And if you really want to believe that BS, because it was all before Steve, then how can you say, well, if rates go down, the market would go down? That doesn't make any sense. And of course, rates were going down as the market conditions were going down. We were in a downtrend out there. Hey, guess what? We're in an uptrend. We are still in an uptrend. You go take a look at the transports out here. Take a look at the New York Stock Exchange, the Dow. The trend is our friend. The trend has not been broken anywhere. It hasn't been broken in the Russell 2000. It hasn't been broken in the semiconductor. When those trends, those longer-term trends start breaking, then we've got something that says, hey, guess what? That trend is no longer our friend. That trend is over. We've got plenty of rate decreases out here, and sometimes they have a reaction that sends the market higher, and sometimes they have reactions where it sends the market lower. This is back in before the top in 2007. Here, come on. The top in 2007 inside the ES Mini was October 11, 2007, right? That was when the actual high came in. And there was a rate decrease out here on October 31st, 2007. What did the market do? The market didn't party. My goodness, the market, what the market did was it went lower out here. I can tell you on October 31st, 2007, we didn't have the housing crisis that was going on back then. We didn't have it. Not that it wasn't in the works, not that there wasn't a problem out there, but we were only, a couple points away. The actual high, the bottom of the high was 1546. The day when the rates increased was 1552. We were already trading into that swing point, and the rates decreased. Don't believe. You got to just simply do the work out here. If you go up the rates, where rates started increase was back in the 2004 timeframe. I think it was the first rate increase that we saw was recent memory was back in June of 2004. That's where rates went up from 1% to 1.25%. The market moved down. Guess what? On the next rate increase back here on October 10, 2014, the market went up. Right, the next rate increase, the market pulls back a bit. The next rate increase back here, right around November 10, 2004, the market moves up. There is no exact direct correlation. What I can tell you the correlation is this. If you increase rates, and I'm speaking only to you, and that would be Janet Yellen out here. If you increase rates and job openings start going down, non-farm job openings, that's all you have to take a look at. In case she doesn't know this, you've got a real problem on your hand, because all other times when that takes place, that really sets off a sell mode, to borrow one of Basil's words. That really sets off a sell mode inside the market. And the other thing, which we really have right now, which she ought to know, is that when you have a declining tops advanced decline line inside the New York Stock Exchange and you raise rates, it has a very bad outcome. And that's really where we're at right now. So but don't get too caught up. So tomorrow we're going to get a rate increase. And I can't tell you, if you look at this, there's no way to say when we have rate increase or decreases that is the beginning or the end of something out here, because it just isn't there in the data that you and I take a look at. So instead, what we have to do is we have to fall back to the existing patterns that are in place out here. So hopefully that assists you. Now, patterns that are in place, if we take a look at the VIX index right now, VIX index is trading at a price point of what, 20, let me just do this, it'll be a little bit easier. It's trading at 2116. It's on its way down to 1890. 1890 is where the VIX is. Like, if the VIX gets inside 1890, it should at least get down there and test it. If it closes inside 1890, it's headed to 1449. And that'll put some energy. That'll add to the Santa Claus rally that's underway with the Dow being up 214, S&P up 26. Hey, let's go take a look at ExxonMobil. It's up $3, right? Remember that long-term chart we were looking at? Let's go see if we can see what the long-term chart of ExxonMobil is communicating to you and I. That might be a buy. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 219, S&P up 28. ExxonMobil, 14 million shares, up $3, trading out at 79.11. You and I, we've looked at this chart a number of times. The green line is a long-term trend line or price channel line. I don't recall which right now, but we'll go take a look at the longer-term charts out here. This completed an A to B equals CD to the downside. Had a nice little bull sash type candle out here on December 9th. Yesterday you had, a outside day. I can't really say that it's a key reversal. Doesn't really matter. It's a bullish candle. And today, a gap up, and the volume behind the move is pretty good, I believe. Let me turn on the volume characteristic. So you've got, 14 million shares. The swing point that it's going to go attack out here at a minimum November 30th only has 17 million shares out here. Just traditional A to B equals CD retracement levels, because that set up a Gartley buy pattern. So as we take a look at that, you've got 5 potential outcomes in a Gartley buy pattern. Today, you've already achieved outcome number 1, which is the 0.382 retracement. You've gapped up into it, so we have a wide-ranging bar today. Don't forget, your eyes play tricks on you. That is a very wide-ranging bar that we have today. And that says that price inside ExxonMobil is headed to 82.22. That would be outcome number 2. Outcome number 3 is headed to 84.51. Outcome number 4 is a 100% move of a move, 87.44. And outcome number 5 is an A to B equals CD to the upside. And if that's the case and ExxonMobil takes out the November 3rd level out here, I know it's a big if, but my goodness, if it does that, that is a huge A to B equals CD to the upside. That would be unfolding. That would actually say that the price outcome number 5 would be 94.68. Now, is that out of the question out here? I don't know. Let's go take a look at ExxonMobil on the longer-term basis. Let's go see what we can find. XOM. Again, this is a monthly chart where we take a look at rising price channels. We take a look at horizontal trading ranges and so forth. So as we take a look at the rising price channel, this takes ExxonMobil back into 1994. But where you and I are focused on is back in the 2002 timeframe. And what we can see out here, nice little bottom, nice little rising price channel bottom. And all price really did inside ExxonMobil was come down to test that level. And then, a nice big old reversal on a monthly basis out here when it had this move on October, in the month of October out here. Of course, price pulled back. We took a look at that on the daily chart out there. It was a green line. Here it's a yellow line. So it was the price channel. Price came back and tested that. And it looks like, if we just take a look at, and remember here, just as we take a look at horizontal, diagonal, we've got the same thing out here. When you break through a rising price channel, doesn't mean that the trend has changed. Just says you're going to go to the next level. Next level is going to be equal to the same distance between level number 1 out there. And that's, in fact, what ExxonMobil did back in 2007 out here. If we take a look at horizontal levels of support, that is the weekly and the monthly, not really providing us with, because I have a lack of data out here, what I can do is go ahead and add some data points here. So as we take a look at the data points, the key level that ExxonMobil needs to break through is going to be 87.33. So the assumption is made this Gartley buy, wide-ranging bar, it's headed to the upside. I don't remember the exact numbers I gave you. 87.33 is the next level of resistance. If it breaks through that, it's on its way up into probably the 97 type area. Let me go back and take a look at what did this said. 94.68 was the A to B equals CD to the upside out here. But it's got to do things one at a time. And that next move inside of ExxonMobil is going to be about $82.22. So, folks, stay tuned. Our man David White is up next. No matter what side of the trade you're on, make sure you use stops. Make sure you have exits. Have a great Tuesday, and I'll see you on wonderful interest rates are going up. But what does it mean Wednesday? See you, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.